$55 billion for a video game company.
A video game company that hasn't had a genuine hit in years, by the way.
Okay, but sovereign wealth money doesn't care about your Metacritic scores, Maya.
It should. That's my whole point. Deal value up 40% last year, nearly $5 trillion globally, and somehow the headline is a consortium overpaying for EA.
Or hear me out. They see something the public markets missed.
That's what everyone said in 2021.
Ouch.
We've got that. Rare earths in Texas, and a shipping mega merger. It's a weird week. The rundown. Okay, $13.5 billion. Nuveen buying Schroders, all cash.
That's a serious check for a UK asset manager that's been struggling with outflows.
Right. And Schroders' AUM has been quietly shrinking for 2 years. So either Nuveen sees something the market doesn't, or they just really wanted a London address.
I mean, the global asset management consolidation story is real. Scale or die. We've been saying it since
Forever, yes. Moving on. Hapag-Lloyd dropping $4.2 billion on Zim.
container shipping is doing that thing again where everyone consolidates right after a brutal down cycle.
Classic. By the distressed Israeli shipper after the rate crash. Very bold. Very possibly brilliant.
I actually don't hate it. Zim has the route network, Hapag has the balance sheet. On paper, that works.
Watch the EU competition filing, though. That one gets messy fast.
Noted. What's next?
Okay, this one's my favorite. USA Rare Earth acquires Texas Mineral Resources for $73 million.
73 million. That's a rounding error on the Nuveen deal?
It is literally a rounding error. But here's the thing. Round Top is one of the only significant heavy rare earth deposits in the entire United States. $73 million for strategic sovereignty over critical minerals.
Okay, when you put it that way, it sounds like the steal of the century.
It might be. Someone in Washington should be paying attention.
Someone in Washington is definitely not paying attention.
Fair. Mirai Asset buying 92% of Corbett for $92 million.
Wait, 92% for 92 million? That's almost too clean. Did they negotiate that on purpose?
I genuinely hope so. Institutional crypto infrastructure play, very on trend, fine.
Fine. And then there's Palo Alto buying CyberArk for $24.5 billion, which
We are absolutely getting into properly in the next segment because that deal has layers.
it has so many layers. The valuation alone,
Save it, that's where we're going next. The big one, $55 billion for Electronic Arts.
say it louder for the people in the back.
A sovereign wealth and private equity consortium is taking EA private in what is genuinely one of the largest tech buyouts we have ever seen, and I cannot decide if this is visionary or completely unhinged.
Can it be both? Because I think it's both.
Walk me through the bull case. You're the former banker. Pitch me.
Okay, so EA is a legacy gaming giant with massive IP. FIFA, Madden, Apex, The Sims. It's been battered as a public company. Activist pressure, quarterly earnings myopia, management constantly playing defense. You take it private, you strip out all that noise, you actually invest in the platform.
Sure. And the bear case is that you just paid $55 billion for a company whose core sports franchises are under genuine existential threat from free-to-play competitors, whose live services revenue has been lumpy at best.
Lumpy, that's a technical term.
I read the footnotes, Nate. It's lumpy. And the console cycle is genuinely uncertain right now. So who exactly is winning here?
The sellers. Obviously the sellers.
EA shareholders, yes, they're absolutely winning. But I keep coming back to the strategic rationale from the buyer side. PwC flagged that deal value hit $4.9 trillion in 2025, second highest on record, driven almost entirely by megadeals over $5 billion. So is this a great deal, or is this just what happens when you have too much capital chasing too few interesting targets?
Okay, that's the cynical read, and I don't fully disagree. There's genuine chatter on the street that sovereign wealth funds are basically recycling 2021 playbooks with bigger checkbooks, same energy, more zeros.
That's exactly what worries me. Because Bain is out there saying acquirers are laser focused on AI capabilities now. Real competitive edge stuff. And EA is not an AI story. EA is a content library story.
Unless the bet is that content libraries become the training data moat of the next decade.
Oh, that's actually not a bad point.
I know, I surprised myself.
Don't make it weird.
Too late.
Here's what I'll say. If this consortium can genuinely operate outside the quarterly earnings circus for 5-6 years and rebuild the product roadmap without Wall Street breathing down their necks, there's a real business there. But $55 billion is an enormous price to pay for the privilege of finding out.
The K-shaped market in one deal. Blockbuster at the top, silence everywhere else.
Which actually brings us perfectly to what's happening in the mid-market, because the contrast is almost absurd. Voices?
PwC just dropped their 2026 outlook, and the number that jumped out at me, $4.9 trillion in deal value last year, second highest year on record.
And almost all of it is megadeals. That's the part people are glossing over. The mid-market is basically frozen.
Bain called it a K-shaped M&A market, which is a phrase I'm going to be hearing in pitch decks for the next 3 years. I guarantee it.
You're already annoyed by it.
I was annoyed the moment I read it. But it's not wrong. You've got cash-rich strategics writing $55 billion checks for gaming companies. And then somewhere in Texas, a rare earth deal closes for $73 million, and it barely makes the wire.
Which, for the record, is actually a strategically important transaction. Round Top is a heavy rare earth project that's been in development limbo for years. $73 million is cheap for what it represents.
I'm not arguing it's unimportant. I'm saying in this environment it's invisible. That's the K-shape.
Okay, but here's where I push back on the Bain framing. They're saying AI is now the primary engine behind deal rationale. Acquirers buying capabilities, not synergies. And I think that narrative is doing a lot of work to justify some very expensive transactions.
Some, not all.
Nate, the EA consortium is a sovereign wealth fund recycling a 2021 playbook with a bigger checkbook.
That's a little harsh.
Is it? Someone on the street literally said they might have run out of ideas.
Okay, that's fair. That's genuinely funny and a little sad.
The EA deal is our top story, so we're going deep on that next. Spill the tea?
Okay, so I have to talk about the EA take private because I cannot stop thinking about it.
The $55 billion one. Yeah.
$55 billion. For Electronic Arts, a company that has spent the last decade making sports games slightly worse every year and charging people for it.
To be fair, the FIFA franchise alone was basically a money printer.
Was past tense. They lost the FIFA license, renamed it EA Sports FC, and somehow a sovereign wealth fund looked at that and said, yes, we want all of this privately.
And the question everyone's quietly asking is whether the SWF crowd has genuinely run out of fresh ideas. Like, are we just replaying the 2021 buyout playbook but with a bigger checkbook?
That's exactly what this feels like. It's a 2021 vintage move aged in 2025 oak barrels.
That's a terrible analogy.
I know, I heard it as I said it.
What kills me is the contrast. Same week you're processing this, Dealflow Agent, an AI native boutique, closes a funding round of €646,000.
Which is roughly what the EA consortium's lawyers billed before lunch on day one.
Exactly. The K-shaped market isn't even subtle anymore. It's just two completely different planets.
I actually don't think the EA deal is crazy, though. Hear me out. Gaming IP at scale, no public market pressure, monetization flexibility.
Nate, they spent $55 billion on a company whose big bet right now is live service games in a market that's getting crushed by free-to-play.
I said hear me out. I didn't say I'd finished building the argument.
Okay, speaking of things that don't get nearly enough attention, rare earths, because that Texas deal deserves more than 30 seconds. Tomorrow's radar. Okay, before we wrap, what are you watching tomorrow?
2 things. Wenobank's $350 million senior notes offering settles Thursday, same day as Sotra Health's $381.75 million secondary, both on March 6th. If either one prices weird, I want to hear why.
Pricing volatility on both in the same session would actually tell you something about where credit appetite really is versus where people say it is.
Exactly, and separately, the Nuveen fund mergers, BXMX and DIX folding into SPXX go effective March 30th. I'd start watching for arbitrage plays building now.
I'd watch for shareholder activism first. Those structures always have a holdout.
Fair.
And Hapag-Lloyd and Zim. The real story now is EU and Israeli competition filings. The announcement is done. The regulators are just getting started.
which, given geopolitics right now, is not a boring sentence.
Not even slightly. Stick around, we're getting into the EA take private next, and I have questions.